Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. You're right. There's probably something wrong with the intro audio. Okay, hey, I'm like super late, but the gist of what's going on right now is that equities have fallen even further into the 3800s, and the treasuries continue to see a bid continued on from yesterday. But we are seeing some price pressures in oil, and silver and gold are bid as well today. Bitcoin actually not down as much as you would expect. So there has been this like equities correlation with Bitcoin, but not in the overnight. They're still right about at 30,000. And we did get the continued jobless claims numbers, 1.317 million versus an expected 1.32 million. So right about, that's continued jobless claims. The initial jobless claims was 218 versus 200. So about 18,000 more claims than was anticipated. I wouldn't say that that's huge, but that is a moderate beat. And we are seeing treasuries move up as a result. So I don't think that I want to jump in on this just yet. I'm going to bet that they're going to get sucked back down and maybe revisit this 120 a little bit. I am a little bit weary about this setup today because what I'm seeing is that there was not a lot of news overnight. We are coming into a period where there's not a lot of news. The only thing that we've got to drive us here after continuing jobless claims were really in line is the options gamma. So we're kind of in a situation where we're likely to see a lot of volatility because of the volatility from yesterday and the options expiration and everything. But we don't actually have fundamental drivers, and that might make it more difficult for us to find a really good trend. So I got to be really cautious about the spots that I pick, not be too greedy. Although we should, given the situation, it's not unlikely that we will see a trend or anything like that. It's just they're going to, even if we do see a trend, it's going to be a really messy one, probably. You get what I mean? You smell what I'm stepping in? That probably sounded all like really contradictory, but did you guys explain what CME Clearport really is and does, just like you would explain to a 5-year-old child? You don't really need to know anything about that. It's just a exchange connectivity thing, right? Let's come over to the Twitters and see what people are saying. Not to blow my own horn, but I had mentioned previously this looked more like 2008 to March 9th, 2009, and it still does. No bottom in sight. Wonder if they will outlaw short selling again like the douchebags at Fed and on Capitol Hill did last time. They did do that. I forgot all about that. Was it better platform for charts than Ninja? I don't know if there is one, to be honest with you. I really think that Ninja's got the best charts for futures, man. Why would I not be using it if it wasn't the you know what I mean? I guess in terms of ecosystem, probably your next best contender is Sierra Charts. Well, they're continuing on forward. They're not really coming back for me, are they? Ah, 04. 04, okay. Yeah. Like a Sierra Charts is a kind of a little convoluted and has a steep learning curve, but um it's a solid platform other than that. Um I well, it's not all positive over there, right? Most for starters, Sierra Charts is not really very innovative. Okay. Most of the cool things that are in there they stole from other people. And they are kind of moving, as are many people, to their own model where like they have their own data and their own brokers. Sierra is way more performant. I wouldn't say it's more performant. It's less memory hungry. They kind of handle things a little bit differently. It's actually really really interesting. So Ninja does have a volume profile native. You just have to have the full version of it. If you have you pay $900 or whatever for the full license, it comes with a volume profile. The same thing that you pay like what $15 a month for on Sierra Charts. They were late. They were late on it. It's a relatively recent addition for NinjaTrader, but no. So the way that their update loops work is kind of interesting because um in Sierra Charts there's basically like this update loop where it's like it caches or it queues up all of the changes and then updates, right? And I think that it runs that loop every 200 milliseconds or something like that, and you can set it. But my recollection from when I was building an indicator in Sierra Charts is that you kind of handle that loop on your own. So like if you make your own order flow indicator, you have to handle the queuing up of objects and processing them and so forth. So it's like every chart is kind of its own process, right? NinjaTrader, on the other hand, uses event updates. So it will every time that there's a change, right? It will queue up the event update, and then the processor will just process them in turn. So if you have a ton of stuff going and your processor is not up to the task, then you will get lag, but it's kind of like interspersed, right? It's which thing updates first can be a little bit random because it's almost completely up to the your operating system as to which thing gets processed next, right? So um Sierra Charts is going to be more consistent in its lag if your system is like not up to the task. Does that make sense? So it's not really a difference in performance that I think anybody's ever really going to notice, and unless you were like programming or something like that, right? You call the bottom today an ESNQ? I don't know, man. Oh, Feds George is speaking right now? I feel like I should have taken a trade and just gone short micros here, but I need to pick my spot well today, I think. Yeah. But anyways, it's kind of a double-edged sword with Sierra Charts because if you're using like I gotta tell you what, in NinjaTrader, there are so many mistakes you can make when you're programming. And I made a lot of them. There was a number of things that I did in my indicators at the beginning, and then later on I read their best practices and I was like, oh yeah, that's not a good idea. Wow. So 16,000 traded at 03.5 and now a big iceberg at 04 and they busted through it and already trading 05. Oh, okay. The default chart interval is 500 milliseconds, but it can be set to 10. There you go. So, but I think once you get the settings set for either of these, you're probably not going to notice. But I have so much stuff open at this time, and I'm have so many order flow indicators set up. Man, that is just going. I really should have taken it, man. I think I just called that one wrong. I was like, they'll come back. No, they must be moving off of something here that Feds George is saying, but I'm not quite sure what it is. I can see financial conditions starting to tighten. Households have been in pretty good shape. I'm not sure I understand what it is that's pushing them up like this. This is a really quite an extreme up move. But you know what? Yesterday we saw a really extreme up move and it just never backed off. So where was I going? Where was I going? Okay, is there a bottom here? So I agree with these people I'm seeing on Twitter saying that this is starting to feel a lot more like 2008. Now, I wasn't a serious watcher of the tape in 2008, so I can't say what things looked like leading up to October of 2008, which it kind of seems like that's where we're at right now. Is like we're having a pretty solid downturn, but like nothing has exploded yet, right? Well, no, I take that back. Terra exploded, Bitcoin exploded, but we haven't really seen like real implosions in the market. Okay, this could very much lead to some sort of a crisis, though. I mean, you're really starting to create that kind of pressure for sure, right? But the thing that this does remind me of post all of that, because really what happened in 2008, they don't call it a double dip recession, but in my mind it was, because there was that initial down move and the crisis was like super insane. And then, uh, you know, all of the banks got hammered and were low, and the Federal Reserve came in and rescued everything, and then they chilled out. And from that October to December, we had a really solid rally. And I remember trading during that time, like on a spreadsheet with stocks, thinking that I was really good at this. And I made a pretty decent profit. I think I like doubled my money on, and of course it's not even remotely close to live trading or even sim trading, but in that portfolio I doubled my money. And then the new year came, and all of a sudden it was just like down every day without fail. It wasn't down big, it was just kind of like a slow and steady every day bear market trend sort of a thing, right? And it really started going to the point where it was like, oh man, like if the S&P 500 drops below 700, like maybe this is just the end. and then they miraculously turned around. And that was the very day. I think one of the big things that I remember happening at that time too was that Obama would come out and try and pep talk the economy, and while he was up, that's when the market would sell off. And so eventually he just stopped having the press conference. Like they just or if they did have a press conference, they didn't talk about the economy. And that was the day that it magically turned around. So when Obama finally shut up and stopped trying to influence the economy. So I don't know what the sort of a thing that happens in here that turns this around. I really feel like that at this point, all of the Wall Street analysts have a floor at, well, not a floor, but like a price target at 3,400. So I kind of feel that the S&P 500 will probably continue to drop until we have some sort of a catalyst for things to turn around. And right now, it only feels to me like things are getting worse. Like uh, the consumer has been relatively strong. We're starting to see the weakness, like you can see it in Walmart and Target, because consumers have basically said, "Well, no, I'm not going to pay that anymore." Right? You took too much from me. I can't pay it anymore. And they're starting to put money on credit cards. Right? That's so that's not very good. But there's not like layoffs and stuff yet. The layoffs are only beginning and only in the most frothy parts of the market, like tech, where those guys probably be able to get jobs. It's just they won't be as nice as the ones that they had at Twitter, you know? So yeah, there's a possibility that this could get worse because there could be like secondary effects and everything from it. But on the split side, another thing that I see going on, and the one thing that kind of gives me hope, is that this market still seems to be very dominated by market gamma. I think that I want to try and finish writing my script for that and maybe record that this weekend, because this weekend would be a great time. Next Monday would be a great time to put that video out. Be very timely because it will be right after the options expiration, right? We'll see if after the options expiration we get a bounce. I think that there's a very likely that you might get a really strong bull market rally. I mean, we did get a rally earlier in the week, but they wiped it all out in one day, right? Was that really a bull market rally? I don't think that was really quite the same thing. Dollar index, it will be a glorious short if it works out. Dude, that was a motive wave. Yeah, I don't know. To be honest with you, I haven't taken the Java-based platforms very seriously. Like, I know that they're out there and that people are using them and stuff, but I've never really sat down and been like, okay, I really want to understand everything about this platform and how it compares to NinjaTrader, like I did with Sierra Charts. Like I did that with Sierra Charts, and I gave it a solid week or so of exploration because so many of my subscribers here do use Sierra Charts, right? But the Java-based platforms, I was just like, screw Java. It's like, if you're going to make a platform, hey, you get all of the disadvantages of NinjaTrader with the additional disadvantage of it being Java. You know? That one doesn't make sense to me. I really feel like, here's the thing. Programming languages, Java and C# is actually one of the most interesting things in programming, okay? Because Java really came first. And C# is basically like Java by Microsoft, right? So you would think that nobody would care. And Java is far more popular than C#, although it's mostly for legacy purposes. Because the whole thing is that Microsoft just did it better objectively in every single way. Like, it is just that making a GUI interface in C# is better. Just everything about the language is better than Java. I think the worst thing about Java is the what do we call it? Like, in Windows, you've got DLLs, right? In Java, you've got these JREs, and it's just a complete mess. Managing that stuff, especially for a business, is like a full-time job. Managing libraries and stuff. It's just working with that stuff in Java is a complete PITA, right? So if you're going to go and you're going to make a platform that you want to be extendable, like truly extendable, anybody can come in and write their own indicator, their own module, and stick it in, and not just like a simple script, but like something that completely changes the program and has your complete freedom to do anything that you want with the data that's coming in, right? The best way to do it is C#, bar none. Add on top of that these things that they have in C# for your ability to like place stuff in memory and have another C# application somewhere else pull it out. like two applications share data, that's a game changer too. And that's how the rhythmic plugin mode works, right? So if you're going to do it that way, right? So if you want to improve upon the platform, right? You want to make a better trading app. How do you do that better than what you already have in NinjaTrader with C#? Because C# is such a great platform for that. Well, there's two ways, really, I think. And one is that you make it more performant by writing it in like C++, or if I was going to do, I wouldn't write it in C++. I would write it in like Rust or something like that, right? But there's that. Deal with the concurrency better. Or you've got to do something that makes it even more extensible, right? So the one that I haven't seen, the one that would be a game changer, guys, I'm telling you, is the platform that lets you program in Python. Because there is so many libraries and frameworks and stuff for machine learning with Python. If you had a futures trading platform where you could directly write your scripts in Python, that would be a game changer, right? Now, I think there's plenty of room. I think that if I had, a backer, if you know anybody with a lot of money, send them my way. Because if I had a backer, I think I could write a better system than Ninja or really any of the futures trading platforms out there. Because there's a couple of key deficiencies that they all share, that features that we could add that I think would make them better. But you would have to have the other parts too. Like it would have to be, if you could come in, you could make something that is performant and also allows you to use Python libraries. And you add all of those features, yeah, it would be bar none the best platform. Is there a way to make the Ninja? No, the Ninja DOM is not very extensible. I mean, you can come in and like you can add a volume profile to it. You can add columns, but it's always bulky. Man, this is just going. I am not getting a pullback at all. I cannot participate in this, man. I'm not going to do it. This may just trend without me today because I cannot buy into that. That is such an insane trend. Can you believe that we're 18 ticks now above that 120 even area? Like I thought that there would be a pullback to 120. It's just still going. And there's not even really anything else going on. I mean, silver and gold are moving up. That's one thing. The oil seems to be pressured on its lows, but the S&P 500 is kind of just kind of doing its thing. So this buying here in the treasury really seems quite obscene. And I mean, look at the prints that they're doing here too. Like they're busting through 4Ks, tons on loading and stuff. Like this is very indicative of a strong trend, but it's a situation where you're likely to get a really steep pullback or reversal. So I really can't just buy in at the top. Like if I was afraid to do it when we were at 2.8, I'd have $20 by now, but I surely can't do it now. I don't know, man. Man, this room did not cool off at night in the evening. I need like a fan running into it all night because we fixed our AC, so that's good. And the AC probably will turn on here in a bit and make it better for me. But actually, let's check that because it is effing hot in here. It says it's only 70 here, huh? Well, I'm gonna just tell it to go to 69. Dude, I saw this great math video on TikTok where this guy was pointing out that anytime you have a a number with a repeating decimal in it, that number can be turned into a fraction. And so he was doing it, and in the end, the answer ended up being 69 over 420. it was it was like the greatest Rickroll. I was like totally into it. I was like, oh, I remember learning about this in school, but I forgot how it worked. Oh, this is super. I see what you're doing. I see. It's so funny. I'm really impressed with some of these creators that you run into out there on TikTok now, because they really like they're just so good at taking these subjects that are really mundane and just making them super interesting and fun. But no, the real issue with the Ninja Jump is it's so bulky. There's so much wasted space on that control. Right? Now, you can make your own. Like, that's the thing that's nice, is that they give you all of the data and access, so you could come in and make your own WPF object and basically create your own DOM and fix the one that they have, right? But the problem with that is that many people have done that, and then they end up like spinning off on their own. Like, that's how Jigsaw started, right? That started out as a NinjaTrader plugin. So there's replacements for it, but they cost money, basically. That's what I'm saying. What's Catherine Ross retweeting here? Michael Saylor, in a global bear market, there is no place to hide, but there is one place to stand. Bitcoin. Okay, yeah, have fun with that. You know what? Bitcoin actually maybe. I think that there's probably some further downside in store here, but Bitcoin may be too close to a point at where we could buy. In fact, it's a much better buy than it was, at least. So, and here's 10. You want it long term? Well, so I think that from a valuation perspective, that the valuation given to Bitcoin is more fair at 30K. I think the issue is that the lower bound of that valuation is still a lot lower, right? And the risk that I see, and I've seen this many times before, and like they've never gone for it. But there's this possibility that they do have the complete collapse, like they used to be pre-2017, and that collapse really does lasting harm to Bitcoin, right? I think that's the real concern here. So for instance, when all of that Luna craziness was happening, Tether lost its peg, and it never completely recovered it. So why hasn't it completely recovered it? Because I think that what's happening is they have this huge reserve of money. So if it goes underneath, then they just use their reserves and go and buy it, right? But they haven't recovered the peg, which suggests to me that they got nothing left, right? So what happens if there's another stop run in Bitcoin, and this time it's Tether that's falling apart because they really can't back it out? And by the way, these guys are pulling their money out too. Like there have been Tether burns of billions of dollars. Like, they're taking their money out. It's insane. Okay, and there's probably not enough money in there to let everybody out, right? So if there's a run on that bank, that's going to be super, super bad. Or there's the regulation. Like, really, what does cryptocurrency give you other than a way to escape financial regulation, right? So if they come in, they regulate the cryptocurrency space, then what's the point anymore? I don't really see the advantage of it. So, you kind of run into this situation where Bitcoin falls below 20,000, which was last cycle's high. Everybody's underwater. You know, that really hampers its ability to moon in the future because everybody's at that point has basically been burned, right? And they all say, "No, not again." So that's where I'm saying like it's a better valuation for sure, but the valuation doesn't tell you what the future is going to be, right? I think this is a fallacy. Michael Burry in particular is the guy that I keep seeing making this mistake. I mean, there is a tendency for assets to come back to their fundamental value over long periods of time, but not necessarily, because that's not what actually drives the market, right? And so just because you have an asset that's undervalued, and I wouldn't say that Bitcoin is undervalued, it's getting close to it though. It's closer than it's been in years, right? And that's why how you get creamed. Like Michael Burry, he has this huge Apple short. He better hope that there's not a bear market rally here, man. Like maybe after the options expire, we get a bear market rally that could just decimate him, 3,300 Bitcoin. Oh, that would I don't know if it can get that low. That would be below my metrics. That would be that it would only happen in like a tether collapse. Here's the thing: if there's a tether collapse, Bitcoin could go sub 1,000 very easily, right? Like think about that seriously. If Bitcoin went sub 1,000, do you still have confidence in it? Do you still think that, oh yeah, they're easily buy and hold? You're just gonna okay. Now you have everybody that's bought Bitcoin in the last like what 8 years or something like that has lost money, right? Who really wants to buy it at that point, right? There really is a point at which there is so much damage done to it that the asset basically becomes toxic and nobody wants anything to do with it anymore. By the way, it looks like the treasuries have formed a little bit of a hole here at 09 and they're just kind of going flat. So if I'm gonna take a trade, it's got to come back. It's got to come back and then maybe I'll try and come in for another leg. But and another thing here, just much of the bullish action that you've seen in Bitcoin was based on fraud. Like these rises that Dogecoin had, it should have never happened. If there was proper financial regulation, probably that never happened. Would never have happened. And Bitcoin probably wouldn't have gotten as high as it did, right? So next cycle, next bull cycle might not be as great as it was, simply because of the effects of financial regulation, right? It was under 5K like 3 years ago. Well, no, it was because 2017 it was 20K, right? Before that, though, then you were getting into like the 1 to 5K, yeah. So I guess we could say 4 to 5 years ago. It's just a lot of money. Like you really got to put in perspective what just happened here in this market, man. An entire generation of people basically had an opportunity to catch up and save a bunch of money, and they blew it all in meme coins. Yeah, gold. The action in gold is very encouraging. I'm looking at silver here. Let me turn it to gold. 1837. Kind of maybe at support at 1800 and maybe But you know, they're still down big from where gold was even 2 weeks ago, right? That's a good point. That Bitcoin was at 3K in March of 2020. That so like one of the things that happened was my valuation metric said that they had come into the top end of fair. They'd come to the top end of fair, and that's like exactly where it bounced. So it was a place like the first opportunity where I could have even thought about buying, but I was like, nah, I want to get a good price, not just an okay price, right? And I should have done it. I should have done it because I would have made money. And I would have gotten out in a great place too. So I'm starting to learn that, you know, even though I didn't do like a proper backtest on the model or anything, but you can see where it seems to have some use. But with the way that I have been trying to use it, I really overfitted, and I could have been given it more leeway and bought. So if you're giving it more leeway, you know, we're in a place where you could buy it. It's just that to me the fundamentals don't look very good right now in Bitcoin. Like the overall economy is moving down, and we think that the overall economy could go lower, right? I don't want to be in Bitcoin if we're still in a bear market, right? What's a good price? Well, you have to subscribe to the Patreon. I really should push the Patreon more. We used to, you know, what was really weird was that we had, oh my gosh, it called it just perfectly going up into 2020, right? And then when the Bitcoin collapse happened, everybody canceled their subscriptions. So it wasn't like they didn't want to use it anymore or we got it wrong or anything. It was just like people couldn't pay for those subscriptions, and the Patreon subscriptions dried up. So we have a lot less subscribers on the Patreon, and I haven't really pushed it very much since then. Like part of it though, guys, it's like honestly, Bitcoin just pisses me off, man. The whole thing, it just I really hate what it's doing to society. You have a bunch of clueless assholes pushing this. They have no clue what's going on, pushing this meme coin. Anybody that does know what's going on are kind of being a little malevolent about it. Like they know that they're going to be making money at the expense of other people, and you know that they're pushing this thing that I think is doing great harm to the world, right? And and if I go and I build my audience based on that, it just wasn't the audience that I wanted. So there was a point at which I said, well, that's fine. Because like really, if I marketed the Patreon really, really hard, I could be making, you know, a few thousand a month from it. But I just don't want to be involved in that space anymore. Or at least I don't want to be a part of like the Bitcoin influencer ecosystem. You get what I mean? Because I think it's for you guys, like I'm not saying it's wrong if you trade Bitcoin and you make money from it, okay? But if you do trade Bitcoin, number one, you better effing make money from it. Okay, don't be like Keller here pretends that he's making money from it when he's really down like 70%. Okay. Make money from it, take it out of that freaking ecosystem and put it into a useful asset that actually generates value and does good to the world. Like seriously. It's always too high. I know that it will never be low enough to buy. That might be the case too. But again, like you got to remember, like what moves markets, orders move markets. What drives orders in Bitcoin? Everybody in the Bitcoin cult, let's call it. Like I mean, it's obvious I don't like it, so I might as well just go full bore, right? So if you're a real true diehard in crypto, then you might not want to listen to me. But okay, uh, what's going to drive new orders? All of these guys in the Bitcoin system, they say we're still early. You're not. Almost all of the millennials have touched it now at this point. Like people aren't you're not going to get the same orders. Like you might get the same people trying to pull their money in and out and try and play the cycle, but it's not the opportunity to make money in Bitcoin going forward is just not what it was in previous years. Save some money in the bank until 23 to 24 and buy some sensible stock. You talking about of this month? You talking about next week? Yeah, go in on Monday. Well, XRP sounds like a better cryptocurrency than the others, but there's kind of there's this fundamental problem with it. So the question is what's going to drive orders, right? And XRP was kind of set up as more of a security, right? So with the way that it works, I don't know if that really derives that currency to appreciate in the same way. And I think that the bigger problem for a coin like XRP is that, its primary use case is that it's better than Bitcoin. But when central bank, digital currencies come out, those are probably going to be even more feature rich and effective. So that kind of kills those altcoin use cases, right? Like it's really only Bitcoin or whoever is the top dog over there in the cryptocurrency space that I really think has a long-term case here. Like XRP could have done it. They could have done it. But all of these coins kind of made the same mistakes, and their opportunity to come in and become like a payment system that actually replaced the financial system is long past. Like they needed to make a different decision in 2017. What they did to the Bitcoin ecosystem in 2017 just completely ruined it, man. So we just go to Binance Futures and Shorts. Well, I'm really coming in here this morning. I'm really quite surprised to see that Bitcoin only went down to like 2,900, and they're trying to climb their way back to 30K again. All while the S&P 500 had like a 4% down. I guess that Bitcoin was down more than the S&P 500, but I don't know. I expected that if the S&P 500 was going to break down below 3950, that Bitcoin was just going to be decimated, and it's holding up. The central bankers are going to slap them in the face. I tell you what, when they make a central bank, if there's like a test net for central, I'm going to be all in on that, man. I am going to learn everything I can about developing on the new central bank digital currency blockchain and doing analytics. I think that I'll be more interested in doing data analytics off of the chain rather than transactions, because that probably there'll be lots of stuff to do that for you. I think that there's going to be some real opportunity in that space. Regulation and global central bank coin. I can't see how crypto survives that. Well, I don't think that it's going to completely destroy them. is just they're going to end up being at the low end of value instead of the high end of value. There's still this thing of how much money is going through the ecosystem compared to how many coins there are and so forth. There's still going to be some money in there. So it's not going to go to zero, at least not now. Maybe 100 years from now, Bitcoin will be basically zero, but yeah, it's so speculative in times of recession. Everyone runs out of crypto. It's not a safe haven / gold replacement. Exactly. But is gold a gold replacement? Because gold hasn't been doing so hot either. Although the past 2 days, things really seem to have like readjusted. Like what I'm seeing here in gold and in the treasuries, it is much more the market that I'm used to. The correlations that should be in place given how bearish the S&P 500 is right now, right? That the S&P 500 is like straight up bearish. We're going into a recession. Everybody panic. And the interest rates are responding by saying that the Federal Reserve won't be able to be as aggressive as they can. The gold is getting a bid. You know, it hasn't done it the whole year. But on, the last one day, you're up 1.5%? Nah. Oh, maybe you had taken some profits on it and then lost some. And if you had just been in when you first started talking about it, you're down like 70%. Gold is holding a lot better than that's okay. Well, that's true, Tobes. No, you're right. Look, both gold and treasuries, you may have lost money. But you didn't lose nearly as much money as you lost in stocks. So it's true. It's just a little what is the word demoralizing, like how is just everything is getting slammed right now, right? You come in and you look at the board and I look at my market analyzer and every column is orange sort of thing, right? That's what we've seen a lot of these days. Okay, so the treasuries did see 6.5 there or so, but then bounced back up in here really easily. So we're kind of getting this thing where the market makers are letting him move somewhat freely around in here. Well, I don't know though. I got into some silver and it was, you know what, this has happened to me a lot of times, is like I'll buy an option on something and it's really good for like 2 days and then falls apart. And that's definitely what happened to me in silver. Was like the next day I was like up $3,000 and then it just keeps going down and down and down and down and down. So I kind of, like I can't get myself to say that I wouldn't have done it because I did want to be in gold as kind of a hedge, but that's probably been my worst call, was getting into silver there. Oh, really? It's funny how in the crypto trading space, every now and then a new thing pops up and everybody just jumps in, like recently order flow, and everybody is talking cumulative delta and they don't even understand what it is and stuff. Like a new shiny thing pops up. Yeah. Well, I have seen people on TikTok thought, they were interested in that. You know what? That might be my fault. So about a year ago, the cryptocurrency guys were all in, they started asking me questions. And so I made a couple of videos about order flow that were really picked up more by the cryptocurrency audience. And so I think that I kind of got them into it. But I don't think that they picked up on the quantitative finance side of things. So they don't understand like the square root law and liquidity holes and autocorrelation of order signs and these things that I think are really necessary to understand what's going on in the book. Like everything that we teach about, like understanding what cumulative delta is, understanding how to read. This is all just so that you can understand what you're seeing, right? But it doesn't explain why you see what you see, right? You're seeing the actual numbers, you understand what those numbers mean, but you don't understand why that's happening. That's what the quantitative finance side of it is. Well, I feel like it might be a little bit early for this, but they're the 10-year at least is hinting that it's going to go to a new high. Pantheon macro on the jobless claims spike. Trends in claims don't move that quickly, so we expect correction next week, but we can't rule out the possibility that some firms have reacted to the surge in energy prices by laying off staff, though in relatively small numbers. I'm really wondering, so this market has kind of been confusing me because like a number will come out and it will be in line with expectations, and everybody's like, this number is so bad, the market's gonna sell off so hard. I don't get it. I don't get it. Yeah, the jobless claims were higher than expected, but not by a ton. Like, let's come back and look at it. We did this yesterday. We'll do it again today. Is it that bad? I don't think it's that bad. Here's jobless claim, unemployment claims, 218. Here's the graph. You kind of got to get out of that pandemic time period that just like messes everything up. But okay, like it's higher than expected. It has been higher than expected basically all year. Well, let's maybe not all year, but through this bear market. Is that crazy? It's not any worse than the one that we had on May 5th, right? But the people on Twitter seem to think that this number was really bad. Yeah, it's stupid. Nah, I don't find any edge in pure charts, to be frank. The only edge that I see in your pure charts is just being able to see what happened, but I've found absolutely no predictive value in them whatsoever. I think the issue is, people talk about like candlestick setups and price action and these sorts of things. I think the reality is there might be some situations where a certain thing is maybe more likely to happen than another thing, but like the difference is super small. Like if you say, I need to just close that window. How like I only know how to express this in numbers, right? It's like if we come in and we do a study over this and we say over the last 20 years this thing goes one way 51% of the time and goes the other way 49% of the time, okay? So you have a 2% margin, okay? Then what is likely to happen to you is if we look at this year, it only worked 30% of the time and failed 70% of the time, right? So the performance of it is just not enough to give you consistency. It's just not enough to give you consistency. You might as well flip a coin. Flip a coin is the same like technical analysis patterns, right? Like here's the thing that I've kind of started to come to is like I used to start out with, well, let's just do something and see how the numbers come out. Maybe there's something there, and if there's enough of an edge to it, then we can try and trade it. And that's a legitimate way to work. I mean, they did that at Renaissance Capital and they had some success with it. But I think that from like a retail trader perspective and the kind of performance that I think that I would like to see, you've really got to have like something stronger than that. You've really got to have like a piece of information that it's not just that this piece of information seems to be correlated with them moving a certain direction and we don't know why. No, it's like this piece of information is going to directly move it. You know, like if Jerome Powell come in here and said, well, we talked it over and we're for sure going to raise interest rates 2% at the next meeting. You know, we're going to do an octuple rate hike. Okay, this would sell. No question about it. What would cause it to sell? Changing expectations about future flows and fundamentals, right? Would that him saying that would induce people to sell the treasury? Okay. It's a piece of information. If we had that piece of information before the rest of the market, it would force the market down. And we know that, right? That's the sort of stuff that I think you should be looking for. And not that this data aberration seems to exist, and over the time period that I can backtest, at least it's had this outlay and stuff. I've done that, and I really haven't had very much success with it. If consumption disappears on home loans, then you have to lower the interest rate. Well, so here's the thing on the housing thing. Okay. I do not believe that the problem is that the interest rates are too high for people to buy houses. I don't think that that's it at all. I think that rather what's happened is most people can't afford homes, and the few people that can afford homes ended up buying them in that mad rush after 2020. Like they'd been waiting on it, and 2020 was their opportunity, and so they jumped on it. And in order to get more housing demand, you have to give people more money. You're gonna have to make it more affordable for them. Okay, so we're kind of getting a little bit of like a double top sort of a formation in the treasuries. I'm not going to say that means that we're going to come back, but I'm hopeful that maybe we are going to get the reversal that I was hoping for. That just this move up seemed like it was a little bit too extreme. Oil, by the way, reversing its losses and back to 105.5. Okay, this move, I was looking at the wrong chart over here for the Japanese yen. The move up in the treasuries was driven by the Japanese yen. Quite strong volume there, in fact. Really, that whole complex dollar moved, or gold moved higher, dollar got creamed. Musk yesterday said 49% of the president's followers are bots. Yeah, well, I read that story, but like, what's their data? Like, how do they know that they're bots? So it's the same thing. They were saying the same thing for Donald Trump, right? How do you prove that? Technical analysis and patterns is not about prediction; it's about risk control, is it? So explain this to me. How is it that something can be useful for risk control, but it's not actually predictive? That one doesn't make sense to me, to be frank. Does the 10-year micro move in sync with Xian or laggy or a liquidity issue? So it really you got to remember. So there's a couple of weird things about this. Okay, this is gonna be super wonky, D. Okay, the ZN is not really a true 10-year note. So the way that it works is it's not cash settled. These are not cash settled futures, right? You're actually delivering futures. If you are there on like within 3 days of the first trading day of the month, you can get called and you would have to um, sell them $1 million in treasuries or whatever, right? So there's are different treasury QSIPs that qualify essentially. Like there's a huge swath of them that they say these qualify as 10 years. Okay. But the reality is that the one that is the cheapest to deliver for them is the one that always ends up dominating the price because of, like, why would you deliver them a treasury that's more expensive? That makes no sense, right? So, you're going to give them the cheapest one that you have. So it just so happens that the cheapest to deliver ends up being a 7-year and not a 10-year. Okay. So ZN is not actually the 10-year. It's really, if you want to be technical about it, it's really a 7-year, and TN is a 10-year. So when you watch TN and the 10-year, those are much more in line with each other. Those are much more in line with each other. You'll also note that the 10-year, like the 30-year is a little bit closer to it than the ZN is in some cases. So you'll see a lot of these cases where the micro 10 will go further or not as far as the 10-year, but more in line with what the 30 does. That makes sense. I know that that's like super wonky, but I'm trying to give you like the unabridged story. In my time, I realized some things that don't make sense to me are absolutely tradable to other people. I mean, prop desk. Well, but here's the issue with that, right? Is that so there's two issues with that. Number one, they might not actually know where their money is coming from. I have to say, I find that a lot. For discretionary traders, it's almost always the case that the traders that are successful, they don't actually really understand very well why they're they might think that they do, but you start going through their results and look at what they're actually doing, and they're doing things that they don't even realize, right? I think that something that happens a lot for some of these guys is that, they enjoy the market. They're reading CNBC, they know what's going on, and they're taking trades in line with that. And so they're making money because they understand the fundamentals. And it actually has nothing to do with their technical analysis. The only thing that their technical analysis does is give them a consistent process, essentially. The second thing, though, is that you actually looked at like their long run performance? Because that's another big thing. Is like, I know that there are guys at Axia that have made a ton of money, right? But I don't have a history of all their trades. I think that you would probably find, if you looked at some of these guys' P&L, that it's probably too wild for you. You know what I mean? Like it probably does have like 50% drawdown set points. Well, they say they don't care, but how do you know what I mean? I guess the point is that what you're saying is basically how people take you out of an empirical space, right? They so things are presented in a way so that you can't empirically analyze it. You end up analyzing it the way that humans are prone to, by trying to find an expert that seems to be doing the best and then trying to copy what they do, right? And so you think that you copy what they're doing, that you'll have success, and then you don't end up having success. What's with that? Well, man, the treasuries are coming back hard now, and the S&P 500 is buying here. It looks like that they might be trying to fill in the gap But that's not very much of a gap. There's like 39.10, maybe 39.20. The big spoofer that's supposed, well, yeah, Navinder did work at Axia, yeah. It wasn't Axia, it was they were called something else back then, right? Utex or whatever. Like when they say God is outside of space and time, it just kicks the ball over the fence, so no real empiricism can be let in. Well, I don't think that God is outside of space and time, but okay, well, want to buy it now in the treasury? These prices are much more fair. Where was it that I was saying it was like 2.8 was where I kind of had the opportunity to just try and run with it, and it didn't do it. But I was kind of hoping that they were going to come back to 120 even. The vendor should play a Batman. I'm really interested to know what he ends up doing. Like, I don't think that he got put in prison. He was just like on house arrest for a few years, right? And by the way, did you see yesterday that Martin Shkreli is out of jail? It's already been 2 years for him. So is he going to go on the speaking circuit now? I think that he's basically he's banned from securities now, right? So he's in the same bucket as the Wolf of Wall Street, right? Everybody's looking at momentum and mean reversion of some form. Yeah. So let me get back to there's the claim that technical analysis is more about risk management. Okay. So really, the way that I hear that described is this. If we have a range and it's going like this, then we have established support and resistance. So if I want to buy like right here as it's turning up, and my stop will be below this is support. And that's why it's risk management. So I don't actually know if it's really going to move up or down here. It could just turn around and crash on me. But I'm able to use technical analysis to delineate a clear line in the sand at which, I'm wrong. Okay. Here's the problem that I have with that. The probability that your stop holds or not is random. It's practically random in that situation. From everything that I've backtested, it's practically random. So setting your stop down there is not providing you any edge whatsoever. Here's what I see the people pushing technical analysis. Here's what they're really actually doing most of the time is they're saying, I'm going to come in and I'm going to buy 3 contracts, and I'm going to give myself a 6-tick stop over on this side, and then I'm going to take one contract off at 4 and another off at 8 or whatever the deal is, right? So what they're doing is they're setting up a situation where if the price immediately goes against them, they're going to lose 4 tick. They're going to lose 6 ticks on 3 contracts, right? 6 times 3 equals 18, right? Whereas if it goes up 4, you take one contract off, you've only made 4. And then if you hit your second target, you've made 4 plus 8, so you've made 12, and then the last one runs. So you only make more than your full stop out if it truly runs for you, right? So what are they really doing? They're taking on excessive risk. The amount that you lose on a trade is greater than the amount that you make on a trade on average. And so doing this setup, you will tend to get a higher win rate, but we already know the problems with that, right? When you look at the distribution of your daily returns, it's going to look something like, Dick. You know, it's one of these things where most of your samples are in here. Maybe this is the last, right? But then there's these fat tails that blow you out. And that's why you see these guys, they seem to do really, really well. And then all of a sudden, one day you see that they blew their account. And you're like, oh, what happened? They don't trade it anymore. They fund other people or things like that, right? Because what they're doing is they're playing with the statistics to make them feel better, but it doesn't actually improve their long-term expectancy because there's not actually edge in what they're doing. Indicators are all mostly trailing. How are you making future predictions from trailing indicator? Well, yeah. So I think that retail traders really abused a moving average, right? Like here's the thing. Okay, if I want to make a trade right now, okay, what's the trend? Like that matters, right? Whether they've been moving up or they've been moving down. How do I determine what the trend is? Well, I'm going to say that the trend is down at the moment. They came back hard, right? So if I'm going to build like a trading system to do that, and a key part of my trading system is what the current trend is, even if I have some other piece of information that is like truly predictive, I still need to know like what the current trend is. And a moving average is a really great way to determine that. And there's even fancy moving averages that reduce lag and aliasing errors so that you get a more responsive line. Makes sense. So, but retail traders came in with this whole idea that like, okay, so I'll take all of these moving averages, and when they cross in a certain situation, then that means that I should buy it. And no, that doesn't work. Doesn't work. Maybe it did work. I mean, I have to say, maybe it did work at one point in time, but the market is remarkably statistically efficient. Like, that's the thing. TA is a feeding frenzy. So you get what I'm saying? It's not like TA is useless. It's just not predictive. It's just not predictive. And to me, risk management is a lot about knowing what I can predict and what I can't predict, and setting the parameters of my trade appropriately, right? Like yesterday, the thing that was making me nervous and got me out of that trade when it did was because there was a Fed speaker. And I know that there's a chance that a Fed speaker says something that's really hawkish. That's been the tendency, is that they've moved hawkishly when he's speaking. So if he's speaking, I've made money. I want to take what I got and run. Right? I think in that situation, I was like way more nervous than I should have been, because that ended up being an insane trend. I could have made like $80 on that thing if I had held it all day, right? But that's just kind of, what you do know and what you don't know. What do I not know? I don't know exactly what Feds Evans is going to say. I don't. There's no way for me to predict that. But I know that could have a major impact on the markets. So I have to time my trades appropriately, right? That to me is risk management. But what is that? There's a real predictive value in that, right? I know that the Federal Reserve speaker can move the market. A trading system should not make price predictions. It should calculate risk and probability of going in a specific direction. Okay, but that's, again, where we come back to what started this all, right? Is what you're going to do is you're going to come in and you're going to do the stats over a 30-year period, and you're going to say, oh, it only actually goes up 51% of the time. Okay. If you can find me something, if you can find me a technical pattern that happens 3 times a day and has a greater than 55% chance of going in a certain direction, and you've backtested that over multiple futures instruments over a 30-year period and can confirm that outlay of greater than 55% of the time holds over 30 years, then I will literally like give you $1 billion. Not even kidding. If you have something like that, that is worth so much money, right? I'm telling you guys, it's not. If it exists, it's something super complicated with math that I don't understand, because the market is so remarkably statistically efficient. Anything with that degree of an edge is going to get arbitraged out already. It's going to be arbitraged out already. Right? So why do we have so many people that are, into the technical analysis of it then? Well, I'll tell you why. Because their standards aren't high enough. See, I said 30 years. You know what? Most people are trading. Well, every time that I see new people come and post backtesting results and stuff like that, what I always see is 40 trades, 2 months of data, something like that. Like I don't think I've ever seen a publicly posted backtest that was more than 5 years. I don't think I've ever seen it. It's almost always just 1 year. You know why? Because if you do it over 5 years, it doesn't look as good, and then you don't want to share it with people. Like seriously. That's why the market is good at fooling us. Essentially, is we as humans aren't very good at being able to see the bigger picture. So we come in and we understand, like we find some sort of a tendency that it's done over the last like X months, and then you start trading that, and it doesn't get you to where you want to go because it only lasts for a few months. Well, listen, you can build this like, okay, so TLA traders saying things that work in a bull market, not in a bear market, things that work in a trend market don't work in a balanced market. Okay, so you could come in and you could say, what is are we above or below the 50-day moving average? Okay, not B, DMA. Okay, and you're using ADX, right? So that will tell you how trendy the market is, right? So you could use these 2 things as filters, and you could build it so we are trending up, and we are trending, or we're not trending, but we're moving up, and then we're moving down, but we're right, we're up and down. Okay, so now you've got basically 4 options, right? And then you go and you run a different strategy based on which market it is, right? Okay. If you can go and do something like that, and it's like greater than 55% over a 30-year period, I'll give you $1 billion if you can show it to me. I won't be able to give you the $1 billion like the day that you give it, that you show it to me. But if you show me the actual setup and like a way that I can automate it, I will at some point in the future give you $1 billion. Okay, a whole billion. If you can find, if you actually have that. Equities just did that when they did. It was exactly what I was worried about, right? Went right up to 39.20 to fill the gap, and then immediately headed back down. I should have gotten involved in the treasuries where we were at 2.81. I was, we were right there at 2.8, and I was thinking, okay, let's turn around and click it. But now that it's down, I'm not interested. Do you have access to the Fed printers? Please print me $1 billion. No, it's not. No, I'm going to automate their system, and I'm going to turn it into a hedge fund, and then I'll pay you back the $1 billion. That's what I would do if I had a system like that. I haven't found it. I'm just telling you but what I kind of lost the plot there, okay? What was the point of all of that? If over 30-year period it's 55% win rate, what does that mean on a month-to-month period? That means that there could be 1 month where it wins 70% of the time. And there could be the next month it only wins 25% of the time. Right? See, everybody's acting in this world, this central limit theory world that doesn't exist in trading. Everybody thinks that it looks like this. This is what they taught you in school, is you get this distribution like this. And if you have enough samples and you found the average right here, and enough samples is 40 to create a statistically significant result, then you should be able to scale this up to infinity. So the central limit theory is basically like this. If this is infinity, right, then I should be able to take any subsample of this, any random subsample of this, and still get the same distribution. Okay? If your data is normal, that's true. But that's not markets, because we're fat-tailed. You do fat-tailed, what happens is the distribution actually looks like this. Okay? So it's this big spike like this with these big tails. And by the way, this tail where the losses is bigger than this tail where you get winners. And so now, if you take a random subsampling of that, you're much less likely to get samples from these tails, even though they matter a lot. So what you actually end up with is you get one month that looks like this, right? Where this is the center where you lost money. 1 month it looks like this, where you made money. 1 month it looks like this, where there's a lot of them in the center, and like it, because it's not a normal distribution, right? So if you want to come in and you want to make day trading like your career, right, and you want to be able to pay the bills every month with it, how are you going to do that, right? The consistency of it is going to be too random. You're essentially, you have a very fragile system. What would the market be like if we all had Renaissance system? Well, if we all had Renaissance's system, then the signals that Renaissance follows would not work anymore, and nobody would make money from them anymore, really. Consistently, at least. Open is way too crazy here in ES. Yeah. It sure don't look positive, though, does it? Well, what I'm seeing right here in the treasury right now is that this 06 area, 05 half, seems to be like balanced. I wouldn't be surprised if we build a lot of volume at 05 half. If I really feel strongly that the S&P 500 is going to puke lower, I could take a bet at 2.8 as a nice round number in the hopes that it goes to a new low, and we could probably make $20, but never done a back test, and I'm going to spend my time on it. I'm looking at statistics. Yeah, well, so here's the problem with your statistics, is that your statistics don't factor in profit and loss. So you can come in and you can say, here is a binary location. Okay, I see a signal. Does it go up or down from this signal? And you might say that it goes up 70% of the time. Goes up 70% of the time and it goes down 30% of the time. Okay. And then you trade on that. Okay. Here's all of the information that you're missing in your system. When it goes up, how much does it actually go up? When it goes down, how much does it actually go down? What is the time period that it takes for those particular things to follow through, and so on and so forth, right? When you turn it into an actual trade, what you actually get is something like this, right? Again, or like this. Hopefully it's more like this. Okay. This would be like distribution of daily returns. This would be distribution of daily returns. And maybe you have something that's really consistent. Okay. Like, let's say that my edge is the overnight high or low gets extended 80% of the time. Okay. Does that tell you direction? It doesn't tell you direction. I don't know if you can use that one. But let's say that I can say if we are higher than the extended session open, but so if it did this, then I can buy and it's going to go higher like 55% of the time. Maybe you could do that, right? Okay. But how much higher does it go? And how much lower does it go? So then you could say, well, I know that it's going to go at least 4 points. Let's say that it's at least 4 points and sell at least 4 points is, my setup, right? Equal risk reward. Okay. So you think that what you've done is you've gotten rid of the tails, right? Because now you're saying if I look at a number line like this, right, there's going to be some trades are here where you won and some trades were here where you lost. And so you avoided that whole problem, right? No, you didn't. Because now you have to go and look at the daily returns. Now your daily returns are going to look something like this. Some days you're going to win and sometimes you're going to lose and yada, yada, yada. Or maybe if it's a trade that you only take once a day, then you have to look at like your weekly returns or your monthly returns. And what you're going to find is there's going to be like this 1 month is like it works most of the time. Like most of the time you make money over here. But then there's this 1 month that's like way over here. That is like you lose every day, you lose money. And that wipes up everything else that you made from this. So a statistic on its own is useless if it doesn't factor in the amount of risk that you have to take on in order to take that trade. So when you see these people and they're giving you these statistics about the market, if it's not associated with a back test that actually shows you the real performance of the system, it's useless to you. Seriously. I shouldn't say it's useless to you. It's not a profitable. You don't have a profitable system with that alone, right? The best you can do is you can come in and you can say, well, here's what people might be doing and they don't realize it, is they could say, well, market sentiment is really bad today. So I think that they could come up to, the overnight here, or they could close the gap and then they could move lower. Just because I know that the sentiment is down. How do I know that? Because I know that like sentiment is bad. Because I know what the situation is. So now you're making a trade. You're claiming that it's based on technical analysis, and the reality is it's not. See what I mean? But like the bigger thing here is like that I'm trying to get people into the mode of is think about it empirically. These things fall apart when you try and test them empirically. You have to think about it empirically, and you have to think of it over a huge data set. Think of it 5 years. Right? I've never been shown by a retail trader something that had efficacy over 5 years. I've never seen proof of that. We need to up our standards. Well, I was thinking about getting short at 2.82. Kind of moved without me. I'm thinking if it comes back for me that I don't really want it anymore. They are kind of moving a bit with the S&P 500 still. Like all of the pivots here correlate with changes in the S&P 500. So that's not exactly a situation where I really want to trade it, unless I know that the S&P 500 is going to trend down again like it did yesterday, right? Empirical evidence only says only a handful of day traders make money. Yeah. Oh, I'm sorry. There's some more news today that I forgot about. U.S. existing home sales 5.61 million versus an expected 5.65, so less than expected. Existing home sales change negative 2.4% versus an expected negative 2.17%. So that is not good. It's not a disaster, but the treasuries don't seem to be moving. They still seem to be following the S&P 500. So what confuses me is this information is passing too quickly. It's not possible to trade the key areas. It's passing. Well, you know what, Viraj? That we're in an unusually volatile market. I think that for most people, it's probably, you notice I haven't taken a trade yet today, right? Like I'm a little weary about this action because it's very, very volatile. But unlike yesterday, we don't seem to be getting a very clear trend, at least not yet. In fact, it's kind of starting to look like the treasuries may push the other side of this. Trading is glorified gambling. Oh, well, you have to define gambling, right? The problem I have with that argument is that gambling is just a word to give a negative connotation to something that has chance involved in it, right? But I think that the implication from gambling here is that there's no edge, that it really is truly random, and that the randomness of it is such that you're guaranteed to lose money over a long enough data sample, because that's the way that gambling is they basically set the statistics up against you so that you'll lose no matter what, right? Well, that's not the case though in the stock market. In markets, you can get an edge. It's hard. And I really have not found one that gives you an edge that based purely on the statistical data. I have to know what's going to happen, right? If I know what's going to happen, then I can give you these statistical stuff. Okay, like here's a real technical analysis. Okay, large meta orders are the largest drivers in these markets. So you're going to see a meta order will move price. You'll see a lot of autocorrelation of order sign because of these meta orders that are being executed over time. So if you know which way, if you can predict the meta orders before they come, you can position yourself. And then the thing is you've got to get the right price and time. And how do you time that? Well, there's a square root law. So the way that they execute these meta orders is they execute a bunch until they form a liquidity hole, and then they wait. And they trail off how much they're trading, and they trade a ton of volume in this area, and then they go for another leg. Right? So if I'm going to take a trade, if this already happened, I don't want to trade here. I want to trade here. Okay? And that is actual technical analysis. Now, what is the issue with this? If somebody comes in and does it the other way, then it's going to do this, and it's going to go even further. Right? And so then you're hosed. Okay? So you have to know what's going to happen. But if you know what's going to happen, if you know the main gist of it, you can predict almost to a T how it's going to play out, and therefore pick a more optimal price because of it. That's real technical analysis, right? It's not much. It's not much, but the bigger issue here is still that you actually have to know what's going to happen. You have to know what's going to happen. I didn't know what was going to happen today. I didn't take a trade. I kind of knew that the uptrend that we had in the treasuries was so overdone that I kind of had to be weary about taking it, right? Now that they're taking out lows here, at least lows since the regular session, like all bets are off now. I don't know. Like this could push those lows and then like immediately turn around and go back higher. Probably depends on what the E-mini is going to do. I'm not an E-mini trader. E-mini is really random. Oh, I hate it. But that's kind of where we're at. Yeah, ES is chopping me up in ZN. Yeah, that seems like what's happening, man. I really hate the trading the treasuries when they're being dominated by what the equity indexes are doing. I really don't like that. That's where some of my biggest losses have come from. It's not random, maybe not, but I have not found a pattern to it. It does seem like here is an okay spot to try and go short yield here. Well, at least somebody was thinking the same thing because they went short there at 2.827. Would have much preferred 2.83. The spread is only like 2 ticks, so yeah, I want to avoid the noise. Yeah, exactly. There's noise in all of these instruments, but there's a lot less of it in the treasuries, relatively speaking. Hey, did they push new lows here? Okay. That's a little curious. So what else do we got coming here? Okay, we got 4-week bill auctions, 9:30, EIA natural gas. Why? You guys, I'm getting into this. You're like got me in this mood again, right? Why should I care what they did? It could be. I don't see where he said that. I don't know why you keep bringing it up. I know that there's guys in here that have made some serious money from trading, dude. Some of the statements that people have shown me are pretty crazy. No, I don't see where he even said that. I don't know what you're smoking, dude. Hmm. There you go. So I kind of see an opportunity to maybe try and take it short in the micros here, but the bids are being pretty pretty weak. Pretty weak. No, I scrolled up. I didn't see where he said that. Oh, I don't know where the market is going because I do not know anything about the future, but up. I up with when he yeah. That's maybe he did or maybe he didn't. If see, like here's the thing. If he had made the argument like I can prove that it does this thing empirically, and the way that I can prove that is that I've made $28,000 this month, then I would be like, well, you're gonna have to prove that, or I'm gonna ban you. But that's not what he's doing. He's just saying, well, I did make money, but maybe I was lucky, is what he's kind of suggesting, right? So, okay. Fair enough. There you go. So you can see it. I think I will take the risk here. It seems to me like what I'm seeing right here is the market makers are just like largely trying to diffuse this through, and that they're just trading with an equity correlation is what I'm seeing right now. Got to be careful here because it looks like they are breaking the lows. Could rise on me real quick, so I got to be able to click out fast, right? Okay, well, so far it's not so bad. Yep, it's kind of just wishy-washy right here at 29. It's actually quite interesting for it to be behaving like that at the low. Okay, there's my... Eh, yeah, that's a little unusual. And then right back up. The 5-year not following as hard, though. I just want to come over here. Let's see here. President Zelensky had a phone call with the UK's Johnson, discussed defense support, etc., etc., etc. Yeah, I haven't really seen too much significant news come through, though, Newswire here this morning, but there's stuff going through here or no. That still feels a little heavy. I think that I took like way too early of a trade. Even if I'm right here, I think that I was like way too early. Wow, 56 there, huh? Hmm. Corn is having a pretty good rally here, by the way. Gold hasn't really backed off on its run. Are we still just chopping because of the E-mini? Because the E-mini has been like hanging out there at 93.03 and just kind of been chopping both sides of that like five points and not really doing much of anything. That might be why the treasuries are kind of doing what they're doing here, because this is not really behaving like a strong sell meta order has come in and they're, maybe they're running into the impact of their trades and that. This looks to me more like they're following a correlation. Because it's able to go bid and offer really easily. But then they'll get to like the key point and it doesn't actually go. And then when it does go, this doesn't seem to move as much. The micros don't seem to move as much. And look, like they recover back up to the 29.5, you know, very quickly. Hmm. Rain says this morning's move down in yields on government bonds is consistent with markets paying more attention to global growth worries. Having said this, the size of the move is again larger than would be expected. More to come. All on this via at opinion. Okay. Yeah, they're moving because of the E-mini. Okay. There's a bunch of orders go off there in the micro 10. There's some significant upticks. I think maybe they come back to 120. Oh, Biden is talking. Tackling inflation is his top priority, guys. Okay, so good move back to 30, but not seeing much more interest to push it further when they go bid there, at least for the time being. Posted an image in Discord. Oh yeah. No, he did say that, but I'm not gonna hold him to it. Oh, okay. Now that down move was a little bit more aggressive. Is that because there was some buying in the E-mini there, I think? Yeah. Hmm. What's this? What's this? That was some serious volume in through there now. Okay, well, I think I'm out. So that flurry of volume was kind of like my last maybe thing in support of what I was looking for. And they didn't really get above that. So I don't know. I found a cool correlation. My losses climb faster than my wins. Well, there's really this thing. It's a really. I've seen this phenomenon many different ways. Like the more you lose, like the worse your decisions get. It's really a thing. Like taking one loss hurts your mind, your decision making process for some reason. Well, I could try and turn around on it there, but interestingly enough, this move is not really slowing things down in gold. It's also not really changing like the correlations in the order flow. Hey, just turning things to you. Oh, thanks. Hmm. Yeah, so we are getting this interesting thing where it just kind of falls. It's often that's often the way that it goes on a downtrend, but it's a little different from what we've been seeing in recent days. Yeah, it could just mean that the sellers are very passive, but oh, you made 62 today? Or that were you trading E-minis or did you do that through the 62? That must mean you made 4 ticks on the 10-year. Yeah. What would be a reasonable down target in the treasuries? I don't know. Well, we're still not back to like where we were at 6 o'clock. That's 25. Yeah, 119.25. So if we like come back to our volume profile, geez, like we're up so much overnight. They're gonna start retracing this. There's a point from 119.20 that is also interesting. This trend down seems to be like really developing into something though, isn't it? Should I buy it down here so that it will reverse for you guys? What do you think? I don't know if I like that. So I think the thing here is that like the S&P 500 could just turn south on a dime here, right? Like it's doing okay. Looks like they have developed a new high, but yeah. I'm really arguing with myself as to whether or not I should try taking a trade here. Oh, missed it. There was an opportunity there. Somebody saw it. Somebody saw it and really went for it. Did you see that? Like there was some orders offering on bringing the spread in, and so somebody hit them all. Okay. So here you're seeing one of those situations where the 30-year is kind of holding back a little bit. Hmm. So you're getting good. Well, okay, never mind. I was gonna say you're getting good bids and offers both ways at 27.5, but looks like they kind of just took a hit, and that kind of changed things. And now, okay, back up again. Like it goes up or down, and there's like 600-700. That's a lot more solid ticks than we've been having. So and it's about half of the size that's at the other prices. So that's pretty healthy. S&P 500 getting a little bit of downside there. That's maybe the rotation if we wanted to buy here. I think I'll focus on this though. Some bids building at 27. That kind of looks like some spoofing to try and out. Hell, he came back. He came up. Yeah, I think that I'm on the wrong side of this, guys. Don't like it. And now they're fighting in the micros again, huh? Curious. Very curious. Is the S&P 500 turning? Well, it does look like this bid that's coming into the treasuries is coming from the S&P 500, but moving down. They haven't like pushed outside of the ATR stop yet. That like makes me like really, really certain that like there's been a significant change in trend. I don't really see that big bid anymore though in the 10-year. And though it does look like a little bit more encouraging of an uptrend. Bloomberg tweets, Bitcoin looks increasingly vulnerable to another drawdown. Maybe. But today it's been doing okay. That's not what I want to see. So I am noticing some flattening in this. The micro's going to fight over that one? No. Okay, so here comes the natural gas inventories, by the way. Sounds like it's pretty in line. S&P 500 seems to be fighting over 3,900 there. Hmm. Well, that's a little bit better. Okay. Well, the 10-year is at the top of the range now. Things to continue pushing there, though. Well, first of all, my positioning was not very good. For them to keep pushing, I think you're going to need to see some more equity weakness. They did get through the ATR stop. So one of the things that I'm kind of keeping an eye on here now is sometimes they'll break those stops and then like reverse and just chop across it. So let's see. I am tepidly long here, yes. In the 10-year. Short yield. I don't know if it's a very good trade though. It kind of looks like I might get what I want, but that I'm gonna have to wait a lot longer and maybe take on more risk than I would like to in order to see it happen. Because uh, it kind of seems like the volume is getting pretty random through here. Yeah. I mean, it's generally it's been up, but like, look, they're able to push it back down to the bottom of that very easily. No, I'm at the mercy of the S&P 500 again. Prominent CIO on Wednesday said he envisioned the possibility of a dreadful summer, one in which the NASDAQ composite eventually unravels, plunging 75%. Oh man, that would be so bad. Are you kidding me? Okay. So they hit him and a little bit pulled, but I don't like that at all. Okay. Hmm. Okay, they bought through it. They didn't hold the bid there, but they bought through it. Hmm. And doing similar things on the bid. Well, so what happened there isn't particularly good for us. Not that I think that that means that we're going to go lower, but that could actually make us get stuck at 27.5 here for a little bit, which is not what I want here for this trade, right? They did tick above it. Would love to see another uptick. See what they do. Okay, that seemed to rustle the market makers a little bit. I mean, there's a big order there at 31.5 now. Not sure how long that's been there for. Time is it? 8:37? Well, not really a fan of the time. Yeah. I still see signs of we're in a bit of a hole here. Like they would have to sweep them at 29.5 and 30, and I don't think that anybody wants to spend 3,000 contracts to push it out of the range. So I think I can probably relax a little bit. See on the off chance they move up here, or maybe the S&P 500 turns down, but it was pretty choppy. Maybe I should have just stayed out. Anthony Crudele is seeing it too. Are you watching me, Anthony? When markets are whippy like this, I only focus on one side of the market, stay small enough to withstand the volatility, don't press anything. Yeah. Well, I tried both sides of the market there, and it didn't really work out for me, did it? How bad was it, by the way? Oh, those were both super teeny, so. And we are breaking out. Actually, less volume than I had predicted was necessary. There still might be some problems at 31.5 and 120 though. Hmm. S&P's doing all sorts of funny things here. That was an okay uptick in the 10-year. The 5-year seems to be leading now all of a sudden. We're getting some steepening here. The chart in the ES has been really random, but this move below 38.90 is starting to make the chart look pretty negative. I don't know. Does that mean that that's like the best spot for it to turn? I don't know. It does. It's all of a sudden just not looking very good there in ES. And the bid in treasuries, it was a pretty solid move. Almost to these big orders here. Hmm. It is nice that the liquidity on the inside is starting to act a little bit normal, but in the treasury, like we're seeing numbers that I'm more used to. Like 100, 200 isn't very much. 6 to 800 is like a typical turn. I don't like where there's some situations where it's going from like 1600 to like 500, but what is Elon Musk going on about? Oh, Elon Musk says, judging by the relentless hate stream from the far left, this tweet was spot on. I think that he was talking about his tweet where he says that the left is the party of hate and division now. Really, a lot of vol here past 30 minutes. Yeah, the thing is that the cumulative delta has kind of been flat through most of this though. So it's still like really random volume. I could see here though where if the treasuries do pull out a win here, that things could really change above 31. But right now they're not willing to touch the big order at 31.5. They're too afraid of it still. And that's with the S&P 500 looking somewhat bearish. So yeah, see, that came back just way too easily. I guess part of that is that my entry wasn't very good, so it seems to me like it comes back to it so easily, but really it's just that I never really got that much to begin with. See, that one's like there was some buying there, and the market makers are making their bids weak so that they can make money off of market making it. Like that's the diffusion of the market makers. There is a little bit of buying coming into the ES though. Hmm. Now what's this? Tune in as I deliver remarks with Prime Minister Magdalena Andersson of Sweden and President Sauli Niinisto of Finland. Man, Finnish names are so weird. Okay. No takers still. It was better. It's better there this time, but nobody's touched it yet. I'm talking about the I guess it's not really big anymore. It's only 1700, but there was a large order at 31.5 that seems to have been kind of holding us back. Bah. Like it's an ascending triangle up into it, but I find it a little curious that everybody is so terrified of even a single lot going into 31.5, even when there was like 800 on the bid at 31. It's hard for them to even hold a good bid there. 500 is okay. Okay, so that's better. Now will we see some hits? Come on. The bid was even stronger. Come on, guys. There you go. Okay. I think somebody finally decided to puke, but that's probably what that was. And tick back down. See, that's one of those ones where like that really makes the chart look a lot better, but they still didn't clear that price. Come on. Okay, now are they actually going to trade through it with only a few hundred contracts? Seriously? You can't tell me y'all's was that afraid of it and then it just pulls and we tick through it. Okay, now the 5-year is hitting into their big order at 077. Aha. Was that so hard? Really, guys, was that so hard? And there's 120 again. Yay. Well, now there's a big order up at 030. S&P's kind of looking like they're going to dive again. I don't know. Not quite there. Here, let's clear our DOM there down below so we can kind of keep track of where the low was a little bit better. Let's reset right here at 120 even. Yeah. Okay, that is a new low. New swing low, at least. I saw something on my Twitter feed just there that says, conservative earthquake rocks Idaho. And I'm like, there was an earthquake? But then I'm thinking, oh, they must be talking politics because it's from the Hill. No, there wasn't actually an earthquake. Can you tell? For those of you that was here that day when we had an earthquake, like at the time, my reaction was like, oh, this is kind of funny. Like nothing bad happened though, but it did something to me, man. Like my body remembers that and is like terrified of an earthquake now. Okay, well, I think that the back and forth at 120 is pretty healthy here for us. I'm still not seeing this like swing up in volume in the 10 year. I am seeing it in the 30 year a little bit, but not I'm not really seeing it in the 10 or the 5. So, it might be interesting if the S&P 500 really starts to fall apart. Oh, that was a pretty good save by them right there, by the way. I mean, that's still kind of within the random range, but oh geez, okay. It's going to be like that, huh? So if the S&P 500 falls apart and we start to see like actual volume come into the 10 year here, then that could push us back up into these levels up at the highs. So I think that we've got like a setup with some fuel on it. Whether it actually gets there or not is the question. There is a big order at 31.5, and I'm not liking the big orders today. I'm just not into it. Not quite. New low, please. There was some stops on that one. They were like, "Oh, I'm getting out before it goes to a new low." Okay, touched it by a tick. Yeah. Okay, that one kind of started slow, but they made some headway there. Okay, there's a big bid there in the ES, and they were hitting into it. They didn't clear it and bounced off of it a little bit. There's two of them down there, 38.85.50. They showing up there on my Vista chart? Yeah, you can see them pretty strongly there in my Vista chart. Now, they could very easily careen down into that and through it, and it seems like he kind of raises his bid when they come up, but they're not actually. They've touched the price next to it, but haven't actually touched the. Okay, so there they touched the order. Yeah, they fell through that. Now you think that they'll get the other half of it at 38.85.25? I don't know. The chart in the ES is starting to look a little bit better there though. And I think that that's probably why you're seeing the treasuries react here. Hmm. I was hoping to get a little bit more off of it going up to 120 even in the 10 year, but that's a good rally there in the ES. They're really reacting to that order. I don't think that they took out the other order, did they? Well, I don't see it anymore though. It moved. I don't see it anymore. Oh, it's down at 38.80 now. Eh. Hate it. All of the market makers just pull and it goes like 3 ticks at once. This is so annoying. when you're getting a strong trend and you see something like that, that can be like a good trade. But in this kind of situation, I don't think that that really tells you much. Well, I'm surprised the ES really responded to that order. Mhm. I have to say though, S&P is really choppy today. You know, it's not really made headway either way. There could be, you know, a change in the order flow after the European close in 30 minutes or so. How that actually ends up affecting them, I'm not sure. But the chart was starting to look really bad there for a while, and you know that was a pretty good save to 3,900. Of course, they might turn back down here. I'm thinking though that it's about time to turn it, move on and get going for the real work today. We had a good day today. We had some good discussion earlier around the top of the hour, around 7 o'clock. There was a lot of people here watching for this, so that's good. Let's go in here. Uh-huh. What should we put in today? High chop after. I don't know what to say. How to put this into a good title. High chop after strong preview. This is like you had a big down day the day before and then it just chops. That's what this is. I want to call it that so we can find it. Call it banter. I don't know. I'm interested now. Now there's, you know, on the 1 minute chart at least, we've got a pivot. I'm interested now to see if the ES makes it back into that 88 range again. Because the treasuries are kind of all bidding up like they're going to. But I do need to get going, so thanks for sticking around, D. By the way, I did make a change to how we cache, and I tested it, but I need to apply it to all the other ones. I also wanted to test out changing because I don't know if it will have the ability to access a folder outside of NinjaTrader's directory, right? So I'm a little cautious about that. Anyways, I'll catch you guys tomorrow. In the meantime, stay profitable, friends, or at least don't lose it all.